Well, Apple is the latest of the tech giants to report its results, and the company shares off actually right now. They started off on pre-markets looking good, but right now they're down about 57 cents, not much. But the company shares rose. They're looking at upbeat forecasts for the lucrative holiday season quarter, suggesting the latest iPhone 17 models are driving a sales rebound. Let's get more on this and recap the tech earnings season with Hatem Dhiab, managing partner at Gerber, Kawasaki Wealth and Investment. Hatem, thank you very much for joining us.
Good morning, Roger. How are you?
I'm good. Apple's off slightly, considering what we saw. Any surprise on that?
I mean, they actually did better than expected. The iPhone 17 is doing really well. They have some issues with their supply chain, or at least China deliveries, but I think it's something they will resolve going forward. What investors should focus on is the quality of their earnings. Their services business is up in the 30%, which is really the highest margin business they have. And if they continue to have even slight growth in the iPhones or at least products, the quality of the earnings will continue to be good.
What's the number you like the best out of all of the ones that you saw there?
Well, this week was a head turner. It was a huge week, right? You had basically all the tech companies. For me, Google was definitely the best number. GCP or Google Cloud is up 34%. This is kind of the best of the bunch. The story this year is Google behind? Are they playing defense in the AI race? And actually, what we're seeing is, they're growing every aspect of their business in the 20% or higher. They just reached a $100 billion run rate for the quarter. So they're just, firing up in all cylinders. But I think, what we've seen in this earnings season is that the AI race or AI kind of spend is becoming really an industrial race where we're seeing a lot of money being spent, and actually it's turning into real revenues for some of the companies.
So is it becoming the norm then? Can people look at this and think maybe this is where they're going to be functioning at?
Oh yeah, absolutely. I think, the last time we've seen this kind of growth in the NASDAQ or the S&P was in 2021, when it was growth at any price. This time around, we're seeing a lot of the spend happening, but there is a lot of revenue that's been generated by these companies to basically pay for it, right? You're seeing accelerating growth in all businesses, from Amazon to Google to Microsoft, and that's what's fueling this AI arms race. So I think people our investors are very excited about what this could mean in the future.
And Amazon also out with its earnings, and it looked good as well. I think it caught a few people off guard by the sounds of it.
Yeah, no, I was actually surprised, because I think AWS, which is their cloud service, was decelerating a little bit, and people thought, it just was just about spend. They were spending too much money to build this infrastructure. But what we see in this quarter around is actually they're growing at 20% more, which means that there is a lot more AI compute being used on AWS, which is actually welcome news to investors, because now they're starting to monetize their spend.
And just looking ahead, we're waiting for Nvidia. They're not out, I think, until the 18th. What can we expect from them, and what can we expect in the lead up to that?
Well, I think all roads lead to Nvidia, right? You've seen basically all the hyperscalers announced almost $130 to $150 billion in AI spend and GPU spend just next year. Nvidia has actually shown us that they can see almost $500 billion in GPU sales over the next 24 months, right? And what Nvidia is doing is really, besides the hyperscaler, they're actually broadening the pool of customers. So they have not just the hyperscalers, but also the U.S. government. They have the car companies. They're really kind of saying that everybody is going to need to use the Nvidia chips, and not just the chip, but the software, the infrastructure that we're building, and really there will be at the core of all of this. So I think Nvidia is really the most exciting story, and it's going to continue to be for a while, and that's why they hit the $5 trillion market cap this year, which is insane.
How do you think the markets will react to them possibly working with China with their premier premium chip. I mean, it's not official, but there's the possibility that rumor's been floating around. How do you think the market will react to that? Will they be excited about it, or will there be concern?
Oh, amazing. I think Jensen Huang, CEO of Nvidia, is the CEO that managed Trump the best out of all the CEOs. Blackwell, which is their most advanced chip, was not even supposed to be sold to China, but we learned this week that might be part of the conversation between China and the US. I know there is some security or defense concerns around that, but the reality is, if Nvidia can sell their best chip to China, that's even a massive additional revenue to them. I don't think that would be the case, but the fact that they're just in the conversation is really interesting, and obviously investors are super, super excited about that.
And I know everybody's talking about Mag 7 when it comes to tech and when it comes to the market in general. Are there any companies that you're keeping an eye on to see what their earnings look like that might be a harbinger of things to come?
Yeah, I mean, we're looking at a lot of the, kind of sidelines, or at least like for us, energy is really the biggest kind of bottleneck for the AI infrastructure. So we're looking at some of the energy companies or some of the providers of infrastructure, of grid, of even the cables for building these data centers and really AI processes. So I think for investors, if this story broadens, which I think you will, there is a lot more bigger players that will really benefit from this.
Okay, Hatem, thank you very much for joining us.
Thank you.
Hatem Dhiab is managing partner at Gerber Kawasaki Wealth and Investment Management.